Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Tuesday, December 2nd, 2025. It's 4:25 p.m., so the markets are now closed. Figured I'd just do an end-of-day wrap with a few kind of an eclectic mix of charts. Wanted to point out on the economic calendar, tomorrow we have ADP employment coming up first at 8:15. So we'll see what that does to the market. On that related note, I've been talking about and sharing my views. Not just opinion, but fact, observations. It's kind of a mixed bag on a lot of economic indicators, and of course, with the government shutdown, we're kind of flying blind with a lot of things. That data that's kind of trickling in, some of the reports are incomplete, but ADP is one that's been pretty consistent because that's not a government agency. So we'll see what they come in at tomorrow. But what that did, just looking at the economic calendar, prompted me to pull up Google Trends. That's something I like to do every now and then. If you're not familiar with it, Google provides this. It's basically you type in any topic you want, and it will show you the how active those hits are, how many people are searching. And you can see you can only go back. They started doing that. Longest you can go back is to 2004 to present. I guess that's when they started kind of archiving this stuff. And I'm just going to show you here. We've hit a level only seen two times, or only seen during recessions. Okay, let me repeat that. No exceptions. This is the first term I searched. And so you have it at 24. That's relative, on a scale of 100 being the top. So it's at 24%, however you want to call it. And it came close there, and we had a near recession. If you recall, you can look at the charts. There was what we call a deer market, neither a bull or a bear. We had a sideways market from 2014 into 2015 for about 18 months with two big corrections in there, but that didn't hit that level. We only got to 21. So again, to reiterate, the only times we've seen this search term topic at this level was during the COVID shutdown, when the world shut down, and of course a lot of people are out of work, and you saw it surge again, unprecedented. We've never in history shut the entire global economy down at one point in time. And then back here, this is the financial crisis. Make no mistake about it. The stock market peaked in October of 2007. 99% of the world, very few had any idea bear market was coming. I and a few others very much profited from that bear market. The writing was clearly on the wall. Again, it depends what industry you're in and if you had certain insight to certain things. But you can see, so starting it peaked in February, hit that level 26, and then again throughout. Remember, the recession spanned around that period. The stock market peak again was October of '07, with March of '09 being the low. And so obviously they called it the Great Recession. And so it stayed pretty elevated then. So interesting to note. Take of it what you will. Play around with your own terms. I'll type a few more for kicks and giggles because I've already done this. But these are just the ones that come to my mind. Being a former financial advisor, knowing that when times get tough, not that I ever can recall any clients calling me to take out a 401k loan. Typically, if you get to that point, well, whatever. People do it when they get laid off or they're just maxed out. This, I don't have to tell you. A lot of Americans have that keeping up with the Jones thing where they've got to have the nice car, two nice cars in the garage and the big house and keep elbow to elbow with everybody else. Again, it's kind of the American way. Not everybody lives that lifestyle, but as you guys know, many do. And so we can see this is just gone, and that's, I guess, the projections here. I guess that's what they do right there. Yeah, or current. But again, this has steadily been climbing, and take of it what you will. You don't have to be an expert to realize what this is. It's just more and more people living, they've got their 401k maxed out. They've got a lot of juice because we're in a bull market. So they want to keep the money in there. But they wouldn't be accessing that cash in a loan or interested in it if they weren't in trouble. So again, we know that the bottom 2/3, it's the elite, the top creme de la creme, 10%, whatever the number is, high-end consumer that's keeping the economy afloat right now with spending on a lot of luxury goods and non-essential items, whereas the bottom, more than bottom half, bottom 2/3 suffer. And this will clearly illustrate that. If they weren't, they wouldn't be looking into tap into their 401k. And I think part of the tick up, I'm just going to play devil's advocate, not devil's advocate, just mention that, this is more and more companies are doing the automated enrollments. You have more and more people going into 401ks. But again, you can see this pretty much just surge up here from the beginning of 2022. It's steadily, in my opinion, very, I don't want to use the word dangerous, but it's a tell. It is what it is. Again, you guys make of it what you want. Spin it any way you want. These are the facts. Google other terms. Wrongful termination comes up a lot when people are getting laid off. They're bitter. They're angry. They want to know, can I sue my employer? I've been there for 15 years, blah, blah, blah. And again, I'm going back as far as I can here. I'm not trying to cherry pick time periods or terms or anything like that. And this, even throughout the financial crisis, was pretty steady. But you can see here that's just really shooting up. Like I said, it just, I try so hard not to get dug into a bias. Now, you know me, short term, 60-minute charts are going to tell me what to do. 15-minute charts some days, 5-minute charts even. This reaffirms the longer term bear market targets. And when we start cracking below the 200-day moving averages and start seeing some of my longer term trend indicators slip on my daily, weekly, and even monthly charts, what goes on here, this is really, if you will, fundamental or macro data, economic data, kind of showing you what's going on under the hood. AI is masking a lot of weakness in the economy. That's been documented. As I've told you, it's the contribution to GDP has been enormous, and it's a circular trade. We all know that now. That's well documented. And so when it unwinds, it'll just have longer term implications because the consumer's already rolling over. Again, not all of them, most of them, and that's evidenced by these charts. And I encourage you, play around with it. Post what you see on the comment section if you see anything that says otherwise, to the contrary, that supports things. Cobra benefits, obviously that's a term. You lose your job, you can extend your benefits with Cobra until you get another job. And you can see really this is all back again. This is when it started. This is all right here. It's the financial crisis. That's the last real recession that we had. COVID was a recession, but if you blinked, you missed it. But it went down. The NBER did mark it one quarter, shortest recession on record because all the stimulus that came in. But either way, we're at post Great Recession highs right now in the search term Cobra benefits or benefit. Could be benefits. Should be the same thing. Let's see here. Yeah, pretty much. Okay. A couple more just for kicks and giggles. Credit card, and again, these are just terms that popped in my mind that people might be searching and just want to see the trends here. You can see that. Again, this has been elevated now for the last year or two here. Again, to repeat, to levels not seen since the financial crisis, okay? So you have a stock market at or just off all-time highs. You've got the majority of pundits, so-called quote-unquote experts, calling for good year end and 2026, no recession in sight. And I think a lot of these search terms would tell you otherwise. But again, we're going to follow the charts. We're going to wait patiently to that all-in moment. It's the two bulls story. I encourage you to check that one out if you're not familiar with that story. So we're going to walk down and get them all, for lack of a better term. All right, credit card debt relief. I did car loan refi. I was going to do auto loan refi, but I like to think like the folks, most people don't have that are in trouble and the car loans don't have the financial. I'll do auto loan for you, but I tried car loan refinance first, and yeah, I'm spelling it wrong here. Car loan refinance, and then I'll do auto loan refinance. Let's hit enter here, and I mean, we know what happened. After COVID, car prices went crazy, but it's just a trend. And again, these are trends. This is nothing new. The trend in car loans have been going to longer terms. The car loan industry, the car business is not the most reputable. No offense to those in it. There are certainly many reputable people, but as you know, many dealerships take people in. They're already upside down on a car, put them in a new car with an even just rolling the loan in there and extending the terms. So there's no possible way they're ever above water on that loan, and it gets worse and worse and worse. That's been documented in the past several years. And again, I really shouldn't, in my opinion, shouldn't even have a car loan. Mortgage, yeah, you're starting out. Everyone, most young people need a mortgage. I think this country, I have no doubt, would be in a better place if people paid their bills, didn't have any credit card debt. You can use a credit card, get your points, convenience, paid off every month. Car loans, again, some people need them, some for tax purposes. You might have it if business, but either way, this is just, look at this trend. It's just shows you where the consumer in the U.S. is going. Especially if you have to refinance a car loan. Tells you you're really underwater on that, and just not in a good place financially, or you'd be able to pay off the car loan or at least stay on top of it. So again, take of it what you will. And then I told you I do auto loan refi, and it's the same thing. You can well, I didn't finish it. Let's go refinance. And same thing, you can see this is maxed out, all-time high coming off there. So that's that. And we'll see what happens. Again, the thing about the stock market and the economy, it's well documented. They are not one and the same. Over time, they will, ultimately, that's everything. The pendulum always swings too far in the opposite directions, both at the end of bear markets. Things are unreasonably cheap, very cheap, and it's lifetime opportunities to buy. Same after big corrections in a bull market, and likewise at the end of a bull market. At the top, prices, valuations have become excessive. Sentiment is too high, and that's what leads to those big drops. If you've ever wondered why. And a run-of-the-mill bear market's a 50% drop, and the two big, the real bear markets, what I call the real ones that we've had, and our lifetime, most of our lifetimes here, the two recent ones, 2007 to 09, and the dot-com bubble where the NASDAQ, or the S&P fell over 50%, NASDAQ fell almost 80%, and in the financial crisis in 07 to 09, both the S&P and the NASDAQ 100 fell over 55%. So, and that's where it comes from. And there's other factors, too, that play into it. But again, the writing is on the wall here. And we'll see. Get ready for that time when it comes. And I'll continue to pump out long and short trade ideas. If you've noticed, we've had probably as many short trade ideas lately hitting price targets as we have long trade ideas. And that's simply a function of what I showed you earlier today. The vast majority of stocks, and I repeat, the majority of stocks are still trading below their 200-day moving averages. Majority of stocks are in a bear market, their own bear market. But because of that false guise of strength, that the overweighted, the cap weighted indexes, which are the S&P 500, NASDAQ 100, with the extreme overweighting and outperformance of those MAG 8, 5, 7, whatever you want to call them stocks, it's really a tale of two tapes, if you will. There's an old pun on Dickens, Anyway, all right, let's look at. Start out here with Bitcoin. Bitcoin's been in the headlines lately, and we've even had some nice trades lately. So let's look at, I'll just use this arrow tool that we're on here. This is on this charting platform, stockcharts.com, Bitcoin to US dollar. So it's Bitcoin and to US dollar right there. Most of you listen to my voice are probably trading in the US, the majority. And if not, again, it's going to, you can use these same trend lines. This is a big divergent high that we just put in recently. Started right here and took about 2 years, spanned about 2 years. It's starting to play out in a correction so far. And we're slightly under. I'm going to zoom in a little bit here, but either way, very significant trend line. If Bitcoin clearly loses this, and then you can see I have this price support just below, then we're probably going a lot lower. You can see early on in its infancy, it went parabolic. That was the initial run, got everybody's attention. And there's been a couple other parabolic. There's I don't know if you can see on my charting platform. If you're watching on a phone, you're probably not going to see it, but I do have there's a parabolic uptrend line right here. And it gets confusing because I also have a linear trend line there. So that was a second parabolic trend line. And parabolic, I've been doing this for a long time, for many years, many decades. And in my experience, I say this often, I can't recall a parabolic uptrend that ever ended well. In other words, they typically end with crash-like drops. And that was the only one I have measured here is that one. That was a little minor trend line break. That was still a 72% drop. That's probably 80, 85 plus. I'm sure that's somewhere in there. So just keep that in mind. Now, Bitcoin has, according to this chart, quote unquote, matured a little bit. At least it's not been parabolic. It's been in a steady advance. But either way, this is a significant technical level. Again, coming off a big divergent high and one to watch. I also watch many different charts. I'll watch BTC. Hold on one sec. Let me get that. Here it is. I shared this with this one with you recently. This goes back 5 years. This is the actual Bitcoin crypto. You can buy it on the Paxos exchange. And this is the last divergent high we had right here. That's just a little errant candle right there that just needs to go away. And then you broke down and you had a drop. I'll try to measure it for you. Just again, to put in perspective so you understand if you're new to this, just what the trends are like. Yeah, that was an 80% drop, 78%. And that was just my measurement line. So let me get rid of that. That was what that was for. Move that. And it ended with, you got it, nice little divergent low. You had a bullish falling wedge pattern, broke out, and led to this uptrend, which ended here with this divergent high. So this is that trend line I just gave you that goes back even further to the left on that first chart I showed you. And so if you look closely here, the way I have it drawn off the lows here, catching all these reactions, we are just below it. So, if it can giddy up and get on through there, that's a little whipsaw. If not, which I still prefer, like I said, I've said it repeatedly lately in videos and in the comment section. In fact, I replied to quite a few comments today. You might want to check the homepage. Gold, silver, GDX, Carvana, Bitcoin, oil was MSTR. I'll get to that in a second. But I still believe this is most likely the lows that were bounced off yesterday when we went long Bitcoin and those other, what I call crypto proxies, I believe to be an oversold bounce off support and with another leg down likely to come. Again, I'll get to that in a second. Where to? Well, these would be two price targets for Bitcoin right there. That's 73,500 and about 48,700 right there. When we look at the ETF, IBIT, I'll try to get to the small caps for you in a second. This is IBIT. That's where we went long last week. Went up, hit our second target, a nice pullback. Whether or not T3 gets hit, I don't know. It's coin toss odds. It's a great level if you do to reverse anywhere here. I'll tell you can really short if you want to get short again. I suspect it'll stall out anywhere in here. If there's some traction to it, maybe we go on and we backtest the trend line. But I suspect that this bounce will be limited in fleeting. So limited both scope and duration. Scope meaning how far we go. T3 is still the maximum target. Give you about a 20% profit if you took it when we entered it here at the lows that day. That was last Friday, Friday before last. And yeah, that's it. So it was a 15% pop to the first target. That would be about 21. You're going to decide if it's worth it. Again, I don't have strong convictions. I can tell you when we break these lows, we'll probably go down to the next target right here. All right, so the other proxies, I'm going to go over those real quick because somebody did ask me about MicroStrategy, although it was a kind of a jumbled question. I wasn't sure what the question was. But either way, we have that's been a trade idea thrown out to you for months now. So here's GBTC. This was the first to market crypto Bitcoin ETF-like instrument. It's just more of like a closed-end fund. The newer ones like IBIT or spot Bitcoin, they're going to track the spot price. This older version here will sell at a premium or a discount, but it's at good support, right? Pretty decent support. That's one of many reasons why we went long last week. But I think it's a support level that'll go and ultimately probably head on down to these next levels here. That's just a big old fat divergent high, really. And so it also kind of plays into my expectation for the stock market. As I told you, flip a coin whether we're gonna peak out and really start going down in the first quarter of next year or sometime earlier. We could get a little surprise before Christmas. Maybe the Fed spoils a party here at the upcoming meeting. I don't know. But again, I think upside's limited in the market. And then where I'm going with this whole Bitcoin thing is I think it's an unwinding of the biggest debt bubble in history. It's the everything bubble. And so when the stock market starts going down in earnest, we see it 10, 15, then 20%, 25, you're going to start unwinding and just popping the shit out of that margin bubble. And selling will get more selling, and then it'll begin to accelerate. And so everything especially this is the king of the risk on the younger generation. A lot of the Robinhood traders loaded up on Bitcoin and meme stocks and everything frothy, Nvidia and stuff like that. And so that's where it'll be a vicious unwind. But you got to get there first. Right now, the primary prevailing trend is still bullish. So we've had a couple little corrections, and you saw things wobble a little bit in the recent correction. But again, so that's where I believe that the selling in the stock market, once we start taking out the 200-day moving averages in the S&P 500, NASDAQ 100, and we start to accelerate down and get in that kind of waterfall type selling mode, that's where you'll see a lot of things, including, I believe, silver and gold. I'm going to try to get to those. Again, I posted some charts in the comment section. Let's go over some of the proxies. I'm going in no particular order. I have my watch list to the side. This is Riot. Again, all these were mentioned at the lows on that Friday before last. And so we hit T2. Still have the potential. Again, coin toss odds whether we're going to go there or not. But as I told you, I made a point to come out Friday morning last week, kind of step away from vacation mode to just tell you, man, it's a quick, when you make a quick 35% in a week, it's that whole, and you stick to your trading plan. Maybe this is your trading plan to do that. My trading plans are somewhat adaptive. So when I see such quick gains without any correction, I'm usually going to book those profits, which I did. So I'll see. I'm still standing aside this trade at the moment, seeing if if it feels right to get back in. But like I said, coin toss odds whether that's it or we're going to go up and hit that next target, and as well as the rest of these. Coinbase again took it at the lows, went up, hit my first of two targets for a quick about 19, right about 20% pop. T2's right there. That's a potential third target if it can pop through T2. But remember, you also have the 200-day moving averages, other things coming in. And again, the max stop's going to be if you took it there. And that's, no reason at this point to let a winning trade, a 20% profitable trade, turn to a loser. So your stops obviously should be ratcheted up to wherever, again, if you're still in what your trading plan is. And if you think these guys are going to new highs, you can use a little bit wider stop and just keep trailing it up. Mara. Again, T1 was hit, pulled back, hit again today. That's it. If it pops up, we go to T2. Again, flip a coin. It's a nice, very nice level and another very objective area to take profits if and when we get there. And if we happen to pop that, that could be a potential third target there. But I'm just not going to list it as such now because my degree of confidence at this point isn't very high. Hive Digital, same story. Took it here, popped up, hit T1. There's potential T2. So most of these were still below those targets we hit on Friday morning when I got that out to you. MicroStrategy, somebody asked about that. This one was shared in numerous videos with a sell signal coming to break. That's the primary uptrend line. Beautiful, beautiful uptrend line. MicroStrategy, as you guys know, they collect, it's a fund of Bitcoin, if you will. I believe they mine it, they collect it, they keep building reserves. They had to reach out recently in this big drop here. I read 2 days ago, I think it was, or yesterday, and reach out to get some more funding. I can't say no doubt or little doubt, but I do believe all these guys are going to blow up one day, especially these guys. Bitcoin's nothing. I'll trade it. I'll trade it long, short. I don't care. Like I told you recently, if we had another tulip bubble like we did in Holland all those years ago, I'll trade tulip bud futures. If I could chart it and make money off it. I don't have to, believe in the longer term fundamentals of anything. That's what technical analysis is all about. Remember, Warren Buffett uses fundamental analysis, 10 plus year time horizon. Great. Worked for him. It'll work for you if you're good enough at it and you have a long enough time period. Traders trade off the charts. But ultimately, like I said, if Bitcoin goes low enough, a lot of these guys like MicroStrategy will ultimately implode, and all the bag holders, the debt holders, people that have extended loans, invested into this company, those that just juiced it with some more financing to, keep them afloat during this big drop. I mean, the stock is, and that was a beautiful bearish engulfing candle. We shorted it in there somewhere. We hit my first of 2 targets. I had 4 total back then, but remember all the reasons stated, including this one. We went long. We went long Bitcoin, everything else, and the equity markets off the April 7th low. So that kind of truncated that trade. And so this T3 and 4 then became, after the bounce ran its course, I added T1, T2, and then this T2 is the old T3, right? Bear with me. Again, I've covered this all in the past. And then this is still what's now T3 zone. It used to be T4 zone, but for all the reasons, we're looking for a nice tradable bounce off that level. And so, so far, you can see MicroStrategy. I always use the golf ball and hacky sack analogy. And what I say there is, again, if you're new to the site, you probably haven't heard this before, but I define a reaction as one of 2 ways. When you're going to support, if you're going down to support level, the golf ball reaction is going to be a bounce. The hacky sack reaction, if you drop a hacky sack on a concrete floor, it's going to just sit there, stop. And that's a reaction in time. That's the weaker of the 2. And so far, MicroStrategy, they used to call it used to be MicroStrategy, and they dropped the micro. It's just strategy now. So far, strategy has just been consolidating on that T2. Now, look, I can all but guarantee you if Bitcoin continues to go up, especially if it exceeds my maximum, my next target, they're going to come in here and start buying MicroStrategy. So I wouldn't short this right now with your money, not until I see Bitcoin break the recent lows. But, bounce or no bounce. And somebody asked, I said, look, if we bounce back to T1 or even S1, this would be a great golden shorting zone if you get it. Best if you're also at resistance on Bitcoin, those the targets and resistance levels I gave you, as well as some of these other proxies. So that would be if we are going to bounce, if this thing's just trying to figure out, hey, is it safe to get back in or not? That would be a potential bounce target. But look, we don't have to do that. Wouldn't surprise me in the least if this rally just fizzles out tomorrow or next week and Bitcoin and all this. So basically what I said in that post, and again, it's in the comment section, if we take out this low from yesterday and Bitcoin takes out its lows, we're going to go down to T3. What caught my eye today going over the charts is this little sucker here. I wasn't even aware of this. This is one of the Trump boys are in one of their many, whatever you want to call it, shady deals. And it's the same kind of company as Strategy. They hold and mine Bitcoin. And when I read about it, I got to find this for you. Hold on one second. Okay, I flipped this article into reader view just so you can see it better here. It had a picture of one of the Trumps on a Barron, I think, or whatever. Anywho, this thing got hammered today. And remember, Bitcoin was up today, but they were citing it because the lockup period ended, and so early investors were able to sell. Well, sell they did. Either way, I wanted to show you this. This kind of shows where these things are at. So you can read all about it. Let's see, Miner, co-founded by Eric and Donald Trump Jr. It plummeted today, and we want to show you here. They're okay. It went public with a merger in September with a simple plan. It would mine and hold Bitcoin. Since the company could mine the tokens on its own, it could accumulate Bitcoin at a significant discounted average price in the spot market, right? Okay, so as of mid-September, the company had a market cap of more than $7 billion compared with $285 million worth of crypto on its balance sheet. Okay, think about that for a second. And now where it's at, according to the latest filings, the company held at the end of September, which would now be worth, I guess they're calculating after the recent drop. So they have about 310 million in Bitcoin, yet the company is worth over 2 billion. Oh God, man, it's going to be beautiful when these things collapse to be on the right side of the trade. And I suspect Strategy. I need to look into it and really see what Strategy's market cap is compared to their holdings. But anyway, I figured you guys might find that interesting. And this is ABTC here. Put in a divergent high recently, and boom, just hammered down. It hit support today. If I had seen that earlier, I probably would have thrown a little speculative money in there because it's probably an overreaction to those selling. But I don't know. Again, I'm not feeling it right now, so I'm just standing aside. Booked some really nice gains on those recent cryptos and the proxies. So just kind of waiting to see where we go from here. Yeah, told you I'd give you an update on IWM, the small caps. This is still a trade that's still coming off. T1 was hit. As is often the case, get a reaction on the initial tag of each of my price targets, and it's been a healthy reaction so far. We took out that little downtrend line, but we're still below the recent highs. And remember, this is bigger picture trade. Right here, you have this massive triple top formation with 1, 2, 3 roughly equal highs. You take the widest part of the pattern, which is from here to here, you add it to the bottom, it gives you the measured target. And again, there's also technicals that confirm that was a divergent high, we dropped to the bottom. That was a divergent high, we fell to the bottom. These were both divergent lows. So it's ping pong. This is the pattern that the small caps have been in for years now. This goes back, this box started in 2020. Down to the bottom, divergent low, you rally. There's a midpoint resistance typically and support around the midpoint. It fell back to the bottom again with another divergent low, went to the top with a divergent high, went down to the bottom, back up to the top, another divergent high. You can see this divergence just keeps getting bigger and bigger and bigger, setting the stage, in my opinion, for a much larger drop once it manifests. Whether they want to pop through and clear the stops again, just like QQQ in the market, the technicals at this point in time, anytime soon cannot and will not be changed. What I mean by that is we put in that is divergent high. It is 1000% guaranteed that any marginal new high soon will still be. You can see the divergence lines stem, they start from way back here. So any new high on the weekly will still be a divergent high. And so we'll just stick with the trading plan. If you want to keep your stop there, that's what I made it, a weekly close above that 250, 250. Sure, if you want to give it a little more room. Again, that's based on the daily chart. This is the daily chart. These are your 3 targets that I gave you on the daily time frame, and that's what that stops for, to keep your losses relatively small if you're just swing trading down to any of these targets here. But if you're going for the prize being longer term targets, which would entail a drop in the smallies of about to that minimum long-term target, about 60% close to it, in line with my drop that I'm expecting on QQQ, then you might consider a little bit wider stop if that's your plan. Okay, here's one of my, I have a lot of different variations, but one of my long-term charts for gold goes back into the mid 90s. And so, had a bear market that ended with that nice, big, beautiful divergent low. That gave us a bull market from about the start of 2001 all the way up to 2011. Ended there. Really, pretty much you could add in the divergence as well. These are my 2 indicators right there. So it was a divergent high. We went somewhat parabolic on that run, but you can see at the final stage I had that uptrend line. There was a blow off top, which I've mentioned many times right there, small, and it was on a volume surge, and then the top was in. Started out a bear market, and then we ended that with a nice, beautiful divergent low. Started a new bull, but there was a level there, and at the time I was harping on repeatedly. I think it was 130, if I recall correctly, on GLD. Is that resistance level, looking for a breakout to really spur and start the next and new bull market after that divergent low was put in. Because again, the divergent low was in and it based and then boom, broke out, never looked back. But it's now gone parabolic. So you can see here, I believe you can see, we have a parabolic uptrend line in place right now. One thing, if you've traded long enough like I have and lived through enough cycles, you'll learn, don't short a parabolic uptrend just because it's parabolic, because you cannot underestimate how far they can go. Those of you that were alive and trading or investing during the late 90s in the dot-com bubble, you know exactly what I'm talking about. Or that example I showed you on Bitcoin earlier on that first parabolic run. So again, oversold and negative divergences are not sell signals. I say that often. I say it a lot. They are conditions. They are conditions that typically precede trend reversals, but you need those sell signals. And so really I don't have a lot on gold. I have a parabolic trend line. We'll watch that. Let me show you silver. Silver has certainly also even more so gone parabolic, but it's really been playing a game of catch up to its big brother gold. Oh, hey, before I leave gold, let me just show you what I keep on this particular chart. I forgot I had it on this one. Down below, let me change my color so you can see it. Okay, this was a bear market in gold that ended right here. If you follow my arrows, let me make them a little darker and you can see it better. 1 second. Okay, blue. And you can see, I've talked about this many, many times in the past. This is not a debatable thing. It is fact that again, the longer term secular trends, a rising dollar is bearish for gold, a falling dollar is bullish for gold. And it's simple. It's for the gold that you buy in the US or in a dollar, anywhere it's denominated in dollars or your own currency. Because when the dollar goes down, it takes more dollars to buy 1 ounce of gold. If you freeze supply and demand, that's what happens. And when the dollar is strong, it takes fewer. And you can see the dollar peaked here. This is the US dollar. Entered a bear market, and that was the catalyst. That was the fundamental catalyst for this new great bull market or bull market in gold. Had about a double bottom, and then it started a new secular uptrend here. And you can see that's why we had a bear market. Demand started getting gold. You still strong for gold. You still had the dollar rising there, but this is where the dollar peaked. And then gold finally broke out of this 2,000, 2,100-ish level. And that's this strong advance because the dollar it's been clear now that the dollar has been in a downtrend since this point right here. So again, we'll watch this. As you guys know, I factored that into my analysis in gold and silver. It was the catalyst for this, or coincided with the catalyst for this first correction. And then I'm talking about UUP. UUP, daily chart. Again, this is the bullish falling wedge, the multi-year trading range in UUP, the dollar ETF, with that bullish falling wedge, positive divergence, moved up here, and then recently broke above my first target after hitting it, and that's what was the catalyst, as predicted it would be if it happened, that we'd had that first pullback in gold, silver, and the miners all recently, and then we put in a divergent high. We're correcting, but I'm still maintaining and preferring, believe that we'll go up to T2, whether we pull back here or not first, all the way. If we get one more thrust up, that will be the catalyst to trigger another correction in the miners. Silver, I'm going to get to in a second. The long-term chart has gone, it's gone certainly vertical here on this daily time frame here, and even parabolic, which I'll show you in a second. Big negative divergences, overbought conditions. Again, divergences are not sell signals, so I'll be on the lookout for a sell signal. When you see such a steep uptrend line on the daily, you want to step down to an intraday chart, see if you can maybe get a trend line in which to trigger a sell signal. I'll be looking at silver futures too as well. Let me just give you this one here. Let me go to silver. I've got it somewhere here on a weekly. Yep, this is the one I wanted to show you, I believe. And you can see back in, this was that same bear market in gold and silver, ended there, and silver went into a parabolic uptrend, and once the parabolic trend line broke, that was the correction. I can measure it for you if you like. For kicks and giggles, we'll do that. Measuring tool should be right here. Where did it go? Got it here somewhere. Trend line percentage change right there. And you go like that. So that drop was about svelte 61% drop. Bear market, whatever you want to call it. Silver once again went parabolic from here to here. And there was the break of the parabolic uptrend in the top. And before all was said and done, the initial drop was here. That would have ended the bear market. I have very, very little doubt. But then COVID came, the world shut down for a bit, and we had that brief plunge. But that drop, what was it? I just showed you 73% to that level. And before that bear market was done, COVID gave a little juice at the end there. And you still kept the multi-year positive bullish divergences. We got very bullish and long on silver and the miners back here, if you recall. And it was that. You had that positive divergence, same divergence there. And again, we broke out of the wedge. COVID hit, took us down to that new low. But we've clearly, from there, this is our parabolic uptrend line. And you can see we've gone parabolic in silver. But again, are we here? Or are we here, or somewhere in between? Are we here? Are we here? Are we here? And so when you start going parabolic, again, don't underestimate it. So we're going to wait patiently for the next decent sell signal. If you're bullish and long the miners, I fully get the fundamental case, but you need to watch the dollar and watch these trend lines and all this good stuff. So there's silver for you. If it breaks soon, we will have drawn it out for you. Big divergent high right there as I draw it, because the indicators are at this point lagging. They're pointing straight up, so we have the potential to blow through there. I just wanted to say this is a hot trade, and if my theory is right, and that entails several things coming together, the stock market breaking, really breaking, not just another 10% correction or whatever we've been trading, a real break in the market, 20+% drop, Bitcoin collapsing, then you'll probably see the same folks that are in those things in margin that are trying to diversify their accounts by buying gold and silver. They will be forced to sell too. So that is my longer term outlook. But until then, we'll see. There's really no saying. When you're at an all-time high, throw a dart to give a price target. There's no resistance levels, so I'm not going to try to call a price target on this. To the upside, that is. And when we have sufficient evidence the trend has changed, especially the primary trend, of course, I'll be more than glad to give you downside targets. We could be in a multi-year uptrend in gold, silver, who knows? But again, it started in 2020, so we are in a multi-year uptrend. Let me just make that clear. I'm saying how much more does it have to go? Okay, and as we wrap this video up, I started the video pointing out the economic calendar tomorrow and the ADP employment report. Let's not forget ADP itself, which I think it's reasonable to use that as a canary in the coal mine, or a leading indicator, if you will. At worst, it's a coincident indicator, but that doesn't seem to be the case now, because if it was, the stock market it would be down. So again, I think unemployment numbers aren't accurate. Those in the know, insider trading is as old as the hills, always has been around, will be. There's both legal and illegal. Both are very prevalent. And insiders know, and you have to ask yourself, they're telling us job market's holding up, everything's hunky-dory, and a lot of folks are, experts, so-called economists and market pundits, are calling for, continued gains well into at least the middle of 2026 and probably beyond. Why is ADP down 25% in the past several months since it peaked in June this summer? Technically, I can tell you why. It's broken the 200 days, the primary uptrend line, but this is a tell. I don't think, I've studied this, I don't think there's a point in history where you've seen this thing drop 25% off its all-time highs and the stock market continue to go up and be pushing or testing all-time highs. And then, so they'll report tomorrow, and this is what it looks like, bigger picture here. There's ADP. You can do it yourself. Just grab a chart and put up the stock market, the S&P 500, and you'll see how they go up and down together. That's rightfully so. ADP being the biggest payroll processor. When the economy is growing, jobs are growing, and when they're not, this is that divergence here. ADP's plunging, stock market's going to new highs. Who's right? We'll see. And then the other one is, of course, Paychex, PAYX, another big payroll processor, also plunging. Paychex peaked here. It's been falling while the stock market goes up. If we go to the daily chart, you can see here as well. Again, it was technically induced, divergent high, trend line break. Then the primary trend line was taken out after that. That's right here. Color that up. There we go. 200 days were also lost right there. The blue and red lines, 200-day exponential and simple moving average. And, Paychex is coming up to a really, really good support shelf. So this is really where the stock has lived for the past, really since it's kind of, since post-COVID here. And this is early 2021 right here. And so very, very key level. Again, when you look at a long-term chart, turn off the comparison. And, the long-term chart, you can see where I have it going. And if it's going to go there, I would be shocked if the stock market didn't have a healthy correction or a bear market, because my projection, this is, by the way, it's a technical measurement. I first mark my levels up. I look at a chart. I mark my price, support, and resistance. This is my long-term weekly chart. This is a big bearish rising wedge that you see here with the uptrend line, which was broken when the 200s were taken out. That was the first, what I call BOD, or benefit of the doubt support. It was the top of this trading range right here. We took it out, so we go to my 105-ish, 106. We're getting close enough, but a little more downside would be nice to hit that, make a perfect hit of the target. Maybe they buy it. Maybe that coincides with a little December rally. And then once it goes, which I suspect it will, again, the widest part of the wedge, bullish, bearish rising wedge, is your measured target, the widest point. You take it to where, you add it to where the wedge breaks down, which this one already did here. And look how perfectly it aligns with my 81, 82-ish, or we'll call that $82 target. And so if that's hit, again, we will almost certainly, most likely bounce first, no guarantee. But if so, either way, bounce or no bounce from where we're at today, that's another 26% downside for Paychex. And To see it drop that much would be a total drop of almost 50%. And historically, you've only seen that during recessions like there's COVID right there. And this is the financial crisis right here where it dropped 68%. COVID was a drop of 47, would have kept going, but everybody got bailed out, especially anybody to do anything with payrolls. We all know that, the PPP, Payroll Protection Plan, and government threw everything they could. All right, guys, I will wrap it up here, a long video, but those are some of the things I'm watching, and we'll pick it up tomorrow. This has been Randy Finney with Right Side of the Chart. Have a great evening.